Tokenized real estate is set to reach trillions in dollars by the year 2030. So how can you capitalize on this new wave and this new technology? Before we jump into today's video, please make sure to drop a thumbs up on the video below. Please make sure you are subscribed. We are dropping multiple videos every single week to stay on top of everything in the fast-moving Bitcoin and crypto space. So make sure you hit the bell notification icon to stay up to date and to get notified about all the latest content. So today's topic is all about tokenized real estate. And we've talked about tokenization of real world assets in previous videos, but today we're going to focus in on real estate. And understanding the market and the market potential here is the first thing that we're looking at with this report from Roland Berger. And what we've got mapped out here is the fact that tokenized assets are going to reach a value of over $10 trillion by the year 2030. And what Roland Berger are saying is essentially real estate, debt, and investment funds are going to be the top three types of tokenized assets. So real estate obviously is in the dark blue on the chart here, but you can see how it's making up almost $2 trillion worth of value by the year 2030 for real estate tokenization alone. So, what does that mean? What is real estate tokenization? Well, essentially what it means is being able to tokenize real estate assets on the blockchain so that you as a retail investor or other institutional investors as well can own fractional pieces of real estate, whether it's commercial or whether it's more of a traditional home or whatever. The potential here allows us to have fractional ownership by essentially denoting the deed or the ownership of the commercial real estate or the property on the blockchain, and having you as one of the beneficial owners being able to earn a return on investment from having a fractional ownership stake in a piece of real estate. So the benefits of tokenization in general are increased efficiency, increased liquidity, increased transparency, and more accessibility. So the efficiency with blockchain technology, as we just alluded to, basically means that you can have 20 different people or entities that own a piece of commercial real estate, for example, and the efficiencies of blockchain technology essentially automate the payment and your ROI on a month-over-month or year-over-year basis. So we'll look at an example in a moment, but it creates amazing efficiencies of scale with how this can be done with blockchain technology. More liquidity in the market as well. The flow of funds is much easier with blockchain technology. More transparency, of course, everything is logged on the blockchain. The potential for less lawsuits or less issues around real estate ownership, and then more accessibility, opening up the potential for real estate investment to more retail investors. So this is just a visualization to kind of show how you could have a piece of commercial real estate and then have fractional ownership denoted on the blockchain, where you have 10 different owners of that piece of commercial real estate, each owning 10% of it, and then 10% of the profits or the earnings from that fractional piece of ownership would be distributed automatically with a smart contract to every single owner month over month. So the potential here for the efficiencies, you're probably starting to see that as we map out this example. And then this is taken directly from Oracle. So Oracle are from ChainLink. So ChainLink are one of the blockchains that are really pushing to create the bridges between real world events and on-chain events. So they're doing this with oracles, and there's a whole bunch of other blockchains like Algorand and others that are trying to tackle this whole problem of tokenization. But the idea here, and the example laid out in this picture, is essentially that you can have a house. The house is denoted with an NFT on the blockchain. The rights to the cash flow of the NFT are distributed to the owners. So it's showing here like a 12-month term. 2,000 monthly revenue is equal to $24,000 over the course of a year. And then you could also sell that NFT on a marketplace. So if you decided you no longer wanted to hold this real estate investment, it would be extremely easy for you to sell that to someone else on an NFT marketplace or on the blockchain in a very seamless manner. So the main point here is to kind of just paint the picture with the potential of real estate tokenization over the next decade as we move towards 2030. And there are a couple of interesting businesses already tackling this and creating the platforms for the fractional ownership of real estate. So Homebase is the first one that we're going to take a look at. So, you know, their tagline here is invest in real estate for as little as $100. And you can start investing today by clicking on the button. But basically, really honing in on what we were already talking about. You know, Homebase lets anyone invest in real estate for as little as $100. You would own a fractional piece of that real estate for your $100 investment, and you would be paid out automatically on the blockchain in accordance with your percentage of ownership. So Homebase DAO is one of the interesting projects in this space, worth keeping an eye on. If we click, they prompt you to basically sign up with when you click on start investing, and they're obviously using Solana blockchain here. So you can take a look at that in your own time. But another interesting option that we have here is Lofty, and Lofty are doing the same thing basically with fractional real estate ownership with their fractional real estate marketplace. You know, invest in rental properties without getting locked in, buy just a fraction of a property and collect your first rent payment later today. So again, these platforms like Lofty and like Homebase are acting as marketplaces for now to essentially curate real estate investments for retail investors. You invest with your crypto or your Solana or whatever it is, turn your dollars into your preferred crypto and invest in that piece of real estate. You then own 8%, 6%, 12% of that particular real estate investment, and then you are paid out automatically on chain depending on your percentage ownership. So some interesting options here on the Lofty website. Obviously you can come in and take a look at these in more detail yourself, but very interesting to see the early stages of this entirely new industry where we can very easily and efficiently denote ownership of real estate on chain and earn consistent income based on our investments and depending on the amount of fractional ownership we have in a particular piece of real estate. So again, some of the blockchains like Algorand, like ChainLink are doing a lot of work to lay the foundation for the actual infrastructure to make this tokenization happen. Like, we're still here very early in 2024, so we're looking at possibly $500 billion to $0.6 trillion being tokenized by the end of this year, and that growing towards 10-11 trillion by 2030. So definitely a space worth keeping an eye on, especially if you are in the real estate game. Very interesting to think about the opportunities and the consequences of blockchain technology and real estate and real world assets being denoted on chain. Keeping an eye on this space, and if you're already active in real estate, make sure you drop a comment on this video and let us know what you are seeing. So as always, if you enjoy these videos, make sure that you are subscribed. Make sure you hit the thumbs up icon. Sorry to give the video a like. Make sure you hit the bell notification icon as well so that you get notified. We are dropping new videos every single week. Make sure you get notified about them, and we'll see you in the next one.